Welcome, traders, to today's episode of the Traders Mindchat Show. I'm your host, Mike Lamont, and today we're diving into something every trader struggles with: the mindset behind locking in profits, sticking to your rules, and turning mistakes into valuable lessons. Before we jump in, if you're new here, don't forget to subscribe to the channel and hit that like button so you don't miss out on future episodes. Also, be sure to check out my books, The Trading Mind Wheel, The Trading Success Blueprint, and the Mara Mindshift Guide. They're packed with insights on mastering your trading psychology and achieving long-term success. All the links are in the description. All right, so let's get into today's topic, starting with one of the biggest challenges traders face: how to protect profits without cutting your winners short. So everyone everyone loves this idea of making big gains, right? But locking in those profits are at the right time is one of the most challenging parts of trading. Often the fear of losing what we've gained or the temptation to squeeze every last dollar out of a trade gets in the way of making smart decisions. So, how do you lock up profits without leaving too much on the table? Part of it comes down to a balanced mindset, a combination of emotional discipline and strategic tools like things like trailing stops or scaling out of positions, or something that I like to use, which I call danger signals. We'll get into that too. But if you let fear or greed take the wheel, you'll either exit way too early or ride the wave too long and wipe out. So let me ask you this: what strategies do you use to lock in profits? Go ahead, drop a comment below, and I'd love to hear how you handle this part of your trades. We have some people that use danger signals and follow what I've been doing with danger signals too. And the thing with danger signals, right? It's a little more advanced than a typical trailing stop or time-based stop, where if the trade doesn't get going, you just sell it right away. The thing with danger signals is that it weighs the evidence that this trade is starting to lose some momentum. The reason why I like it and the reason why I use it is because it tells me exactly that. It tells me when a trade is starting to lose momentum. And then it's up to me to decide, do I want to stick with this or not, given all the signals that are being shown? There's a free indicator in TradingView that I've created, or that I hired Brandon Shapiro to create for us, and we released it to the world for free. It takes everything that's in the Trading Mind Wheel book, all the danger signals that are in the trade management chapter of that book, and it brings it to life in this free indicator. And just to give you a firsthand look of how it works. Come over to well, right now I happen to be looking at Ethereum, but let's just see what Ethereum has. So right now it's saying that, oh, there's only two potential danger signals on Ethereum. This is a trade that I was looking at earlier, and it's starting to break out already. It's telling me that there's two potential danger signals here. One is a character change, and another is the fast stochastic crossing below the slow. And you could roll your mouse over this thing, and that's pretty cool too. And it gives you the details of what exactly that means. So, for example, the character change, it's telling me that the advanced daily range over the last 2 days is larger than that of the last 10 days. So, is it starting to get narrower, or is it starting to expand? Depending on where you're at in a trade, that could be a danger signal. And when it comes to these danger signals, um, it takes a bunch of them for me to decide to change course. Now, I see a couple of comments coming in. Um, Caleb, yeah, wow, three tornadoes in your area. Stay safe, my friend. Uh, Here's something else. I have found selling some into strength helps me retain more profits. Inevitably, if I don't sell into strength, I give it back. And that's one of the things. We're either selling on the way up or we're selling on the way down. And there's not really one way around it. We've just got to decide, well, what do we want to do? And why do we want to do it? And once we have that locked in, and if we do have those kinds of things figured out the beforehand and written down, it makes it a lot easier to stick to it versus if we say just keep it as an idea in the back of our heads. Very good comment. So before we transition to the next topic, I want to say that it's important to remember the goal here is to maximize the potential of your winners while managing the risk. Don't let emotions dictate when you're going to sell. If you have a strategy that's a strategy driven exit plan, that's going to be the key to having consistent profits. And if you take the time to write these things down, it's really going to help you stick to it. All right. So, on to the next topic. We've got mindset when selling. So, let's talk about this because it's very easy. It's very easy to get caught up in the excitement when a trade is going well, but selling is often the mental battle that really begins here. Do you hold for a little too long or do you cash out? This is where your emotions, your fear, and greed, it's when all those things can start to take control, right? Well, when it's time to sell. They say that it's a lot easier to buy than it is to sell. And big part of the reason why is because there's so many what ifs involved when it's time to sell. So a powerful tool here is emotional detachment. Emotional detachment. What does that mean? It means that you should sell because it aligns with your trading plan, not because you're afraid of missing out on some extra gains or you're afraid of losing. Learning to view each trade with clear, objective mindset can really make the difference. If you're finding value in anything that we've said so far, make sure that you are subscribed to the channel for more trading mindset content. And if you're looking to go even deeper into mastering your psychology as a trader, my book, The Trading Mind Wheel, covers these concepts in depth. It really is a must read if you want to level up your trading game. So when you approach selling with a plan and a calm mindset, you're no longer chasing the market, you're trading strategically. Next, let's talk about discipline and rule breaking. So, I know a lot of traders struggle with this breaking your own trading rules. I've been there too. Breaking trading rules is something that happens to all of us. And uh, speaking on as somebody that's been trading now for 25 years and has written 3 books on the topic, I'm not immune, right? You'd think off track with my routines and plans, and I just start tossing those kinds of virtues out the window, then yeah, I could very easily fall off track. Even trying to walk the straight and narrow, it's still possible to get knocked off track. So what do you do? One thing that you do is you set a clear plan, but in the heat of the moment, FOMO or overconfidence, if that does kick in, you are more prepared with a plan to not allow yourself to get knocked off course. You have something that can ground you, something that you can refer back to, something that if you're feeling frazzled, that you could go back and say, well, what do I do? Well, it's written out in plain English, what you're supposed to do, and you could just refer to that and then get back on path. One of the most important things you could do is develop the discipline to stick to your rules. No matter what's happening in the market, the discipline is built by acknowledging your emotional triggers. That's one of the ways. Are you breaking rules because of fear, greed, impatience? How do you know? One way that you would know is by keeping a journal of these things. And sometimes you might journal these things in or close to real time. Sometimes you might need to give yourself a little bit of time between that event and when you're going to write about it because it'll create a little bit more objectivity, right? In the heat of the moment, if we're feeling FOMO or if we're breaking rules, it could be very easy to start to blame other things rather than to see clearly. And it's one of the reasons why having this level of detachment is so valuable. It What detachment allows us to do is to have space and think clearly. And it also, if you're doing this consistently, one of the things that it allows you to do, it allows you to have a stronger sense of when you're out of state. Like you're almost able to look over your own shoulder and see yourself uh, starting to behave in a poor way or in a way that's going to lead you off track. And in that, you're able to pump the brakes, take a walk, do what you got to do, come back, take a look at your plan, and then you start to get back on track. Let's take a recent example. Gonna pull up a chart over here. And here's our example. We've got Roblox. I was talking to someone just the other day that had a rule to sell or to buy, rather, to buy a position after a certain time, after 10 a.m. to enter the position because, well, sometimes you get action like this where price opens strong and then immediately reverses. And so this is one of the ways that this person avoids these kinds of moves. They broke that rule and it led to a quick loss. If they'd stuck to their routine, they would have avoided this trade altogether. It's a tough lesson. It's a tough lesson, but an important one. Trading rules are there for a reason, and every time that we break them, we're increasing our risk. And it's not to say that one rule per se is better than another rule, right? It's not to say where uh, this person's rule is better than this person's rule. Part of what when we're all masters of our own game. We develop the game, we're the game masters. Think of the trades as the players in the game, and you're the referee. You're the game master. You came up with the rules. The trade is the thing that has to obey the rules. You're there to make sure that it does. So if this thing is breaking out and, well, sorry, Charlie, uh, you're not getting in the doors before 10 a.m., then it's up to you to enforce the rule. If it breaks the rule, then too bad. If it follows the rule, then it gets to be in the game. Somebody else comes along and they say that, oh, well, I bought this one and look how I'm doing. Well, great. If they're following their own rules, then that's an excellent trade. If they broke their rules, then that's going to be a club that goes out of business. Think of yourself as the game master. Think of yourself as the rule master. Think of yourself as the enforcer of the rules. And all these trades, they're the players, and they must obey your rules if they want to play. I cover strategies for building discipline and managing these kinds of emotions. I post a lot about this kind of stuff in my free newsletter. If you're not already on that list, be sure to join. You'll get weekly insights on trading psychology straight to your inbox. Let me know in the comments what your biggest challenge is when it comes to sticking to your rules. And if you haven't already joined the free newsletter, you could get it at marrowwealth.com/newsletter. And I put a link to get on the newsletter as well. That's down in the description if you're over here while watching on YouTube. All right. So on to the next topic. Learning from mistakes. We all make them. What matters is how you respond. One of the biggest mindset shifts that you can make, or I think that any of us can make, is seeing mistakes as opportunities to grow rather than setbacks to dwell on. If you do feel like something like that Roblox trade, for example, is sticking in your craw, that's okay. That's okay. It's okay to give yourself a little bit of time to sit with it. But you should have a limit to how long you're going to sit with it. If you want to give yourself 5 or 10 minutes, heck, if you want to give yourself an hour, give yourself a set amount of time where, all right, this is the amount of time that I'm going to give myself a pity party, really allow myself to feel this and dwell on it. But after that time, you know what? That's it. It's done. It's in the past, and I'm moving on. And it's at that point where you decide that yes, I'm moving on. It's not where it's forgotten. You're moving into a place where you're going to be able to begin to look at it objectively and use it as a learning opportunity for your future growth. So when you make a mistake, ask yourself, what can I learn from this? How can I prevent it the next time? For example, in that Roblox trade that we just discussed, it's not just about the money that's lost. It's about reinforcing the importance of sticking to your rules. See a comment or two coming in. Let me switch back over here. Very well done. Very well done to the person there that made that mistake. Moving on. That's the right path to go. And this kind of stuff. This kind of stuff is exactly what I cover in the Marrow Mindshift Guide. How to turn your trading mistakes into fuel for your long-term success. So if you want to check it out, and if you want to dive deeper into shifting your mindset after losses, that's another great book that is in the description Go there, read it. And for those of you that have read it and you'd like to help others, go ahead and leave a comment on Amazon or wherever you bought it and leave a review. Yeah, even just giving it a ranking. That's something that will help others discover it on Amazon. Do that. I appreciate it. Alrighty, so let's get into the Q&A portion of this. Let's answer your questions. Go ahead, type them into the chat. Let me know what questions you have on anything that we've discussed up to this point. If you have questions that are outside the scope and you just have some other trading related questions, I want to hear those. Go ahead, type them into. But first, let me answer these questions here. All right. So first question that came in: what do you do when you're in profit but you can't decide whether to hold or to sell? How do you keep your emotions in check? This is a fantastic question, and thank you to the person that submitted it. So I have a couple of different ways that I go about doing this, and I also talk about all this inside the trading mind wheel. So if you want to dive deeper into this, the trading mind wheel again is linked below. So what do you do? The first thing that I do is I like to give myself four kinds of exits for every single trade that I'm going to put on. So when I put on a trade, like this one here in Duolingo, right? Get this up on the screen. I already enter with four kinds of exits in my mind. Three of them are going to help me lock in profits. One of them is going to be cutting a loss. Or another way that I like to think of it is I have three ways to get paid by the market. And I have one way where I'm going to keep my costs at a minimum, because every trade that we put on, there's an associated cost. And the cost is the difference between our entry price and our stop loss. So here's the ways that I set up for myself. Number one, I set up profit targets. And there's a variety of ways that I go about setting up profit targets. There's technical ways, there's psychological ways, there's ways where I'll go and look at my recent statistics. I'll look at the statistics of the trades that I've taken most recently, and I'll see, well, how far did those trades go? And the reason why I do it in that way is because the market moves in waves. So if my most recent trades have done exceptionally well, I might be on one of those waves. So I want to let my most recent trades continue to run until I start to see less gains come in. Then that's a sign for me to, okay, start to lower some of your profit targets and start to take some of those gains off the table a little bit earlier. The next way that I'm locking in gains is by backstops. What's a backstop? A backstop is where price runs up, it builds a floor, and then it continues to move its way higher. With Duolingo here, this one has been fairly challenging when it's come to the backstops, because you can see what, since price broke out and ran, it hasn't really formed another layer of support. So the closest one that I was able to identify was this down here, 227.40, and that's where I've kept my stop now for a little while. If you look to the left of the chart, there is some price action over here that supports that level. Maybe you could make a case to raise it a little bit higher. I might be doing that, but another thing that we'll get into in just a moment is having different ways to manage a trade, and this is advanced. Having different ways to manage a trade depending upon where you're at in the trade. We'll get to that in a moment. Next up are these danger signals. So if I get too many danger signals on a trade, I'll either aggressively raise that backstop or I'll exit the trade completely. Now, how many is too many, you might be asking? Great question. The answer to that depends on what stage of the trade I'm in. So, for example, when this trade started way down here at 217 bucks, my threshold for danger signals was fairly tight. If it had six or more at any given point, then I would have called it quits and cut the trade. But price has run up and prices run up significantly. So it's earned more flexibility in the danger signal department. At this point, it would take nine danger signals or more to kick me out of this. Right now, the indicator picks up three. The last thing is the stop loss, that initial stop loss. And the way that I'm looking at that initial stop loss, I like to take a look at it based on multiple time frames and multiple confluences around where I'm going to set that technical area. In this case, it was pretty easy. Price was moving sideways and it built the floor right at around 208 bucks. There's my stop loss. Now, let's talk briefly about these different portions of the trade and how do you know when it's moving into there. Again, all this stuff is outlined in detail in the Trading Mind Wheel book. So if you haven't gotten that yet, go get that book and read it. When I enter a trade, I consider that the open and it has its own objective. My first objective is to get my initial risk, the difference between where I enter and where I set my stop loss, to get that off the table as soon as possible. Right? Then I'm playing with the house's money. So long as this stays in my pocket, I'm good. Now the mindset is able to shift to where I can let this run and my own money is not at risk. It's thinking, well, how much profit do I want to give back if price does fall? But that's a different mindset than your own capital being at risk. Your principal goes down if you take a loss. So that's why I want to get that initial risk off the table quickly. Next is the mid game. What's the mid game? The mid game is when my stop is at break even and I've taken my first scale out. So when do I take my first scale out? Well, what's my first target? The first target is going to be based on how far have my recent trades run. And it's also going to be where is there some other confluence? It might be a Fibonacci level. It might be a prior resistance level on the chart. Back here with Duolingo, my first scale out was at 233.90. That was the low of this gap over here. Thought it was the first logical spot where price may have found resistance. Price kept on going. Great. This is why you don't need to do everything all at once. I like to piece out of trades on the way up so that way if price keeps on going, well, thank God I held. Right? It's it's important to be able to move incrementally in the market. Many times you want to move incrementally. Every now and again, it's important to make a decisive move. As price continues to run, we get into what I call the end game. And the end game is where I'm trying to stretch this trade out for as long as it's able to go. It has a maximum number of danger signals that I'll take. And I'm also looking for major sell rule violations. If you guys are familiar with the work of William O'Neill and his book, How to Make Money in Stocks, one of the things that he talks about are these parabolic moves where price is 100% or more above the 200-day moving average, where you have an island top being made, uh, things like this, then that could be the sign that this trade is done and it's a major sell rule and it's time to exit the trade. That's where I'm at with Duolingo right now. It's run almost 40%, and I'm allowing this last bit to continue to run. In fact, I have the flexibility now to let this form a base pattern and then add back some of what I've sold already. So when you're trading from a position of strength and when you're in profits and when you start to build a big profit cushion, you're trading from a position of strength. You have a lot more flexibility, but you also want to make sure that you don't end up giving back too much where price falls in and hurts you. That's why I have all these different ways to sell. And that's why I think that it's important to have these kinds of things for yourself. So again, all of that is in the Trading Mind Wheel book. And if you already have that and you're ready to start writing your plan, then what you want is the Trading Success Blueprint. And that book is also linked in the description. Let's see, what other questions do we have coming in? Let me see here. I know sticking to a trading plan is important, but what if you feel like you're missing out on opportunities? How do you avoid FOMO? I think that this is another excellent question. So here's how I like to avoid FOMO. Big part of it, right? And I know at least some of you sitting in the audience, you already know the answer. The answer is to follow your trading business plan. It's a lot different than just having a trading plan. What you need is a trading business plan. A trading business plan is going to tell you, here's the setups that I'm going to look at. Here's the market conditions I'm going to trade those setups in. Here's how much I'm going to risk. It basically forces you to think through all the elements of what you're going to do, how you're going to do it, and why you're going to do it. And if something falls outside of that scope, you're not even looking at it. You're not even thinking twice about it. So that's what I would recommend to you. The best way to avoid FOMO is to have a trading business plan. And the purpose of it isn't just to avoid FOMO. The purpose of the trading business plan is to help you figure out, how can I continuously invest? How can I continuously trade and be certain that at the end of this, I'm going to have a lot more money than what I started with? That's what we're doing this for, right? Well, we're not just sitting on here because this is a grand old time, right? Like there's a lot more people out there that are better speakers than I am, that are funnier than I am, that are more entertaining. You're here because you want to learn. You're here because you want to do. You're here because you want more money in your pocket. The way that you're going to do that is by setting up this business plan for yourself that ensures that, yeah, I thought through everything. I've got it all laid out. I've tested it. It works. And now I can go and trade this. And yes, I understand that not every trade is going to be a winner, but it's not about every trade being a winner. It's about allowing the odds and the probabilities to work in my favor, allow the math to work in my favor. You take 100 trades. You don't know which ones are going to be the winners and which ones are going to be the losers. But statistically, you do know that at the end, you're coming away with more money in your pocket. That's what we want to get to. Any other questions? We're a little bit over time, but that's okay. I'm happy to stick around for another moment or two if there are any more questions. Okay, here's one. How do you recover emotionally and mentally after a losing streak? What steps do you take to get back on track? That questions today are really good. So, here's how you recover emotionally and mentally after a losing streak. The first thing that you need to do is to know your numbers. Right? This might sound a little bit counterintuitive, and it might just be like, "Oh man, I just had this losing streak, and I want to get over it. Well, what do I do?" Well, it really is a if you know your stats, you know what's normal versus abnormal. If you're following a system, if you're following a plan, you know what's normal versus abnormal. So, for example, I have about a 50% win rate. That means that over any 100 trades, I should expect a losing streak of about 8 trades in a row. 8 trades in a row, that sounds like a lot. Yeah, it does. On the flip side, I should also anticipate a winning streak of about 8 trades in a row. When we know our numbers, we're able to anticipate. So that way, we're not beating ourselves up on a losing streak. We're not celebrating too much on a winning streak. It's just the math, it's just the numbers. You need to take yourself out of the game. You need to stop identifying with each and every trade that you put on and thinking that that's me. It's not you. You may have built the rules, you may have built the system, right? But this here, this isn't me. This doesn't define who I am. Am I happy about it? Sure. Right? Having a trade run up almost 40% in just a couple of weeks, that does feel good, but it's not where I used to feel. I used to identify with something like that. I used to think that, yeah, I'm a winner and look what I did and I'm so great. And you know what would happen the moment that I would start to think that way? I bet you could guess. Losing streak right around the corner. Start getting a little too cocky. Start relaxing on some of the rules that maybe got me into a trade like this. And why not? I'm great. Here's the evidence. No, you're not. You're really not. What you need, if you're following your system, if you're following your business plan, you do that over and over and over again. There's going to be some trades that go like this. There's going to be some trades that go the opposite way. That's okay. Measure yourself, measure your success, measure your trading success by how well you follow your own rules. That is very important because you following your own rules is what's going to lead to your equity curve steadily rising. Also, in your business plan, you must have both a mechanism and a schedule for how you're going to evaluate yourself and continuously improve. Otherwise, you're going to stay exactly where you're at. You could be trading for 5 years, 10 years, 20 years. If you don't have a way to review yourself, evaluate, make adjustments, make tweaks, make progress, the best that you could hope for, the best is that you stay exactly where you're at. I don't know about you, but that's not good enough for me. I want to continuously evolve. That's why these things must be set in place. Alrighty. We spoke about a lot of things today, and I hope that you got some value from this. If you haven't yet subscribed to this channel, please hit that like button and subscribe. And if today's content has been helpful to you, make sure that you like and subscribe, and know that we've got a lot more great content on the way, so stay tuned. Man, that's it for today. That's the end of the Trader's Mindchat show. So thank you for being here. And remember, trading is as much about mindset as it is about strategy. Protecting profits, maintaining discipline, and learning from mistakes are all keys to long-term success. If you want to dive deeper into these topics, check out my books, The Trading Mind Wheel, The Trading Success Blueprint, and The Marrow Mindshift Guide. You'll find links in the description. And don't forget to join our newsletter for more exclusive insights on trading psychology. Thanks so much for tuning in, and I'll see you next time.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.